Investors, are you uncertain about what expenses you can deduct? Well, stick around because today we're going to discuss a few specific tax deductions that you are eligible to deduct. Well, hello everyone. For those of you who are new to me, my name is Lisa Marie McAllister of Pinnacle Financial Services, and I help real estate investors who fix and flip residential properties to obtain funding and to save on average $30,000 per year through strategic business and tax planning. Now, for those of you who are curious, I am both a CPA and an enrolled agent. But before we get started with today's discussion, I ask that you please comment, like, and share this video. And also, don't forget to click on the subscribe button. That way you'll be notified each time that I upload a new video. Now let's get started with today's discussion. Now, I wanted to briefly discuss eligible deductible expenses for my fix and flip investors because there seems to be a bit of confusion surrounding them. Now, let me start off by first saying your eligible deductible expenses are dependent upon how the IRS sees you. The deductions that you are able to make are highly dependent upon whether the IRS sees your flipping as a business, thus placing you in the dealer status, or if they see your flipping activity as an individual investor. Now, to ensure that we're all on the same page, let's first start by explaining what a real estate flip is. A real estate flip, also called wholesale real estate investing, occurs when an individual investor goes out, makes a purchase of real property, whether it be commercial or residential, makes repairs to it, or makes major improvements such as adding a bathroom or swimming pool to the existing structure, and then sells it at a profit. If you flip a property at a profit and the IRS sees you as an individual investor, you will report this income on your Schedule E of your 1040, and you'll be paying capital gains tax, long-term or short-term, depending on the holding period, which is the more favorable tax treatment. And you'll report the gain or loss as an investment on your Schedule D. Now, on the other hand, if you do a flip and the IRS sees you as a dealer, you will report your income on the Schedule C of your 1040. And you will be paying tax at your ordinary income tax rate. And also, unfortunately, you'll be stuck with paying the yucky self-employment tax of 15.3% on that income. Also, as the last stinger, you will not be entitled to participate in the 1031 exchange treatment. So this is one reason you want to try to avoid the dealer status. It doesn't treat you very favorably when it comes to taxes. So now that we've gotten all that out the way, let's talk about some business expenses that you are eligible to take. And there are quite a few of them. You can deduct the purchase price of the property. You can deduct any materials used for your repairs and upgrades. You can deduct real estate taxes. You can deduct business cards. You can deduct cell phone. You can deduct office expense. You can deduct supplies expense. You can deduct the gas used to go to and from the property. You can deduct vehicle and travel expenses. You can deduct advertising. And also, if you use traditional financing, You can also deduct the mortgage interest expense for the period of time that you carry the property. So, in summary, as you can see, guys, there are numerous tax deductions that you are eligible to deduct. But I will say it would behoove you to get your bookkeeping in order and to open a separate business account. And the two things will help facilitate the recording and tracking of all of your expenses, as well as provide a separation between your personal and your business expense. Now, as a bonus, I'd like to also add that having your bookkeeping in order and having a separate business account will help strengthen your position should you get selected for an IRS audit. Guys, as I've stated before, I've been a federal government auditor. I know how these things work. If the IRS finds one thing wrong with your books, that will make them look a little deeper. And trust me, they will keep digging and digging, and eventually they will find something. And once they find something, that will make them open up your books further. It's just something you really don't want to have to go through if you don't have to. And just to help protect yourself, get your things in order. I'm telling you, you won't regret it should you get selected for an IRS audit. Now, if you're a real estate flipper and would like me to assist you with strategizing and getting your tax strategies in order, click on the link below. I'll be happy to assist you. And so that concludes today's discussion. I really do hope you found value in it. Don't forget to comment, like, and share the video. Click on the subscribe button. That way you'll be notified when I upload a new video. And until next time, goodbye.